Hello, and welcome to Donut Investment. This analysis is for Diamondback Energy on NASDAQ as of 24th of July, 2026, with a share price of $204. The full report is on donutition.ca. A hold at $204.68, a high beta Permian pure play sitting at a 52-week high on a fragile oil premium. Short-term hold, medium stays, buy. Long has been trimmed to hold because buying a cyclical at the top of an oil spike is poor risk-reward. Diamondback is a low-cost Permian pure play that has built real scale through acquisitions. Quality scores 71 and valuation 64, fair, not cheap. The key thing to understand is that it is a geared bet on the oil price. With almost no diversification away from crude, it rises faster than the sector when oil runs, and it falls faster when oil drops. Right now oil is running, which is exactly why it sits at a 52-week high. The reason it is up is the Strait of Hormuz. Tanker strikes pushed Brent briefly over $100, with West Texas crude around 90. That powers the medium-term buy, but it is a path-dependent premium. If the conflict de-escalates, oil falls back and a high beta name like this one leads the sector down. So we credit the tailwind for the medium call, but we will not pay up for it on the long-term one. This is why two of the three signals are holds. The stock is at a 52-week high, the momentum gauge is overbought, and a short-term buy needs the tape to confirm. It hasn't. So the short call is a hold, and the long-term call has been trimmed from buy to hold as well, paying a cyclical peak price for a high beta oil name on a geopolitical premium is the wrong end of the cycle to be committing capital for years. The medium buy stands, the fresh long-term entry does not. The risk here is squarely the oil price, magnified. Because it is high beta, a Hormuz de-escalation that drags crude toward the low 70s takes Diamondback down harder than the sector. The bear case is roughly $160, about 22% below today. Second quarter earnings also land in early August. This is a good company. It is simply the wrong price and the wrong point in the cycle to be buying it aggressively. Now weigh the risk against the reward. The bull case is roughly 22% above today, the base case the most likely about 7%, and the bear case a fall of about 22%. So you are risking about 22 to make 22. So, I'll call on Diamondback Energy, on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donutition Investment at donutition.ca. The link to the full report is in the notes below. Have a great day.